Hello and welcome. At the start of every new year, this is the one show you and I must listen to. It's our annual program on what will be the top 10 trends of 2019. It is, of course, a yearly interaction with the one and only Ruchir Sharma. Thank you very much, Ruchir Sharma, investor, author of books that have topped the New York Times bestseller list. And one thing I found out about this show, everyone who has watched it every year say they have learnt a lot from Ruchir's analysis. So, if you want to know what to invest in this year, what not to invest in, what should you do with your savings, will interest rates go up or down, should you be cautious in 2019 or can you go a little wild? Listen carefully. Ruchir will give you all the answers, right? He'll even give you a hint about where you should go for your holiday this year and which countries are best to be avoided as they may be too expensive. Of course, you may not be going on a holiday at all because you're just too excited about the big election coming up and you want to watch every move, every step that's happening closely. Then I have a secret tip for you. Ruchir is coming out with an absolutely excellent book on Indian elections. It's called Democracy on the Road, a 25-year journey of India. It'll be available from the 1st of February onwards. And I tell you, the book is really a fascinating account, full of amazing details. Ruchir's got a memory that's unmatched, and stories of politics and politicians all across India. Democracy on the Road, remember that. Now, Ruchir, to get back to your day job. So what's going to happen in 2019? Just tell us and then, we'll make a move.
Well, I think to establish some credibility, maybe we should look at what was said in the past.
Okay, right, that's true. Let's look at what Ruchir said last year and whether it actually happened or not. What are the top 10 trends last year? We'll quickly go through them and then review and see did they work out or not and how seriously should you take them. First of all, the first top trend was global growth will peak in 2018. Let's see what actually happened, Ruchir. Your data shows that global growth in 2018 actually hit 3.75%. And that was a peak, right? So it did come down, but why?
Well, I think that, this has been a sort of really surprising development over the last 12 months, which is the fact that almost every economy in the world, with the exception of the United States, has decelerated. I think there are some structural and some cyclical reasons for it, which that interest rates have been going up across the world, global trade has been slowing down, there's a lot of uncertainty because of the global trade battles which are going on between US and China, which we'll speak about during the course of the show, and also the fact that you have demographics which are turning against the world with the large chunk of the world's population which is aging. So I think these factors have come together, and that's why
get personal here.
that in 2018 every economy in the world with the exception of the United States showed a deceleration.
Every economy, almost every
like every major economy.
Exactly. That's amazing.
That
is amazing. And that trend is kind of continuing, or
yeah, absolutely. So the momentum, and I think that's why markets have been getting quite nervous across the world, that in the last few weeks that trend has also caught up in the United States, with that economy also now showing signs of slowing down.
Right. So that was the first in your, and you got that one wrong. I mean, we always fluke sometimes. But okay, let's have a look at what was the second in the top 10 trends of 2018. This is what it was. It was going to be a year of boom shakalaka in Europe. Now, what actually happened in Europe?
Well, Europe also disappointed. So, I mean, this is something which caught me by surprise, because in 2017, we were seeing some signs that finally the sick continent, which has suffered 2 recessions in the space of a decade, was breaking out from its long slumber. But unfortunately, even Europe in 2018 disappointed on the downside. And I think that was one of the big surprises as far as I was concerned.
Because it was kind of picking up and then it just didn't
Exactly.
deliver.
It relapsed. Not relapsed, but it sort of, the momentum faded. Last year.
Right. Now let's have a look at the third of the top 10 trends of 2018. This is last year. You said that there's going to be a lot of indicators that good economics may not be good politics. Now that's contrary to what everybody says. Let's have a look at one example of whether this is true or not, and this is some of the data that Ruchir and his team have unearthed. People with approval ratings were low. All these leaders of 20 major democracies had low ratings when the economy was on a high. And in 2018, approval ratings went up when the economies of these 20 major democracies were low, from 35 to 45. So life is not all about economics. You guys, investors,
right?
There's more than economics.
Yeah, no, I've always sort of, felt that, and that's a lesson that you've learned from India and taken it global.
Right.
Because usually we're learning global lessons and seeing how to apply to India. But in India, this connection's been quite sort of tenuous, and I think that's what we're seeing across the world as well, that there are so many influences now that what really leads to leaders being popular is so hard to gauge. And I think that why we saw this bump up in approval ratings is also something which is mystifying. Right. But the basic connection is this, that in 2017 you had a booming global economy, record low approval ratings of leaders.
Amazing. Yeah.
Last year, we had a bit of a relapse in economic growth in many parts of the world, and yet approval ratings ticked up a bit, also a lot because many new leaders came on to the surface. And those new leaders are enjoying some sort of a honeymoon, you can argue, and some of the very unpopular leaders got booted out.
And you'll be going into a little bit along these lines about 2019, whether this will carry on. That's
right.
In the course of the show. Let's have a look at the top trend number 4 of 2018. This is what it looked like, is that everything is a bubble, the everything bubble.
Right.
Now let's see what exactly you meant by that. Every bubble burst in 2018. Only cash was the winner. That's what you're saying. Oil, down 20% last year. Other commodities, down 10%. That's another bubble that burst. Global stocks, down 8%. And cash, up 2%. Now again, amazing that you foresaw this. But what was the underlying reason for this?
I think the end of easy money, which is the Federal Reserve is increasing interest rates, which is the global central bank. And the end of easy money, I think, led to a lot of bubbles bursting. And one we haven't shown because it couldn't quite fit onto this graph because the scale was so huge, was the Bitcoin bubble. If you remember at this time last year, there was so much hype about that.
Yes.
That is down more than 70% over the last 12 months. So the end of this easy money era has led to so many assets across the world doing quite poorly. In fact, one fascinating statistic here is that there was not one major stock market in the world which in 2018 generated a positive return in dollar terms.
God.
Not one.
Yes.
In terms of all the major stock markets, if you look at them. Yeah, there were some small markets somewhere like Qatar or someone which gives you positive returns.
Right.
But everywhere in dollar terms, including the US, had negative returns last year.
That is huge in terms of the spread.
Yeah.
Doesn't happen that often.
Exactly. I mean, like a year like this, at least since 2008, we haven't seen something quite as negative as that.
Did oil go down because, and commodities go down because of what you earlier just saw, that the general growth rate had peaked and growth rate was coming down, demand was less,
yes,
expectations were a little pessimistic?
Yes, that was one factor. Like it's always a demand-supply factor.
Yeah,
but
of course oil maybe they pumped out more as well.
Yeah, that's right, especially from the United States. But in general, I think that the fact that you had a sort of slowdown in global growth, I think, is one reason why you had this everything bubble unwinding last year, along with the end of the easy money era.
Right. Now let's look at number 5 in the top 10 trends of last year. This is what Ruchir said at the beginning of the year. You have a peak calm in stock markets. In other words, stock markets in 2017 were very calm. They didn't go up and down, weren't very volatile. And he said that was going to be over. This is what it looks like. The volatility is measured by this 6%, the drop between the high and the low was only 6% in 2017. And man, it came back again, 22% in 2018. Now that's a reflection of what?
Well, this is just for India.
Just for India, yes.
This went down. But this graph is for India, but this trend is universal, that in every stock market around the world, we saw much more volatility. And that sort of reflects greater uncertainty about the future prospects for growth. So 2017 was a very calm year, but if you know anything about markets and the nature of that beast, it is that volatility is is its second name. So I think we saw a comeback of that, but also reflected the fact that you have much greater uncertainty about global growth everywhere.
I mean, India going from 6% volatility to 22%, that's a real amazing indicator, which not many people look at uncertainty.
Right, but the 22% number is more in line with the historical norm. 2017 was so exceptionally low. So I think that's the way I view these numbers.
Okay, but you did spot that it was a
the 2017 was a very exceptionally...
calm before the storm. We all could have told you that. Okay, let's move on to number 6. Item number 6 in Ruchir's top 10 trends of last year. Tech, he says, will be as good as it gets. Let's see what actually happened. Tech stocks plunged. So you had said that they were already too good, and look at the amazing change that actually happened. They plunged by 25% towards the end of 2018. That really did come as a shocker for the rest of the world, but you've been saying that right from, even towards the turn of 17, 18, you said this is just a bit of a bubble, and 25% down?
Yeah, 25% on average, and there are of course many stocks, including some of these Chinese giants, like Tencent, which are down even more than that.
Wow.
So so it's a year where a lot of the tech stocks really finally the sheen came off. The FANG stocks, as they call them there, the Facebook, Amazon, those kind of stocks. So so a pretty universal decline in tech stocks, which accelerated from about October onwards.
And you think this is a correction which was necessary? They were again out of whack with their true value?
Yeah, that's what we're going to be discussing in our 2019 trends. But
that's why this happened at that time.
Yes, exactly.
Okay. Now let's move on to the next trend of 2018 that Ruchir looked ahead across. He said this is now point number 7. Remember, big dominates like never before. Big size matters.
Right.
So what actually happened on that?
Well, I think that the same trend has sort of continued. It's hard to foresee as to when this is going to end, but the entire point here being that if you look at every sector, and this is true even in India, that the top 3 companies in each sector.
So here, big you mean big companies?
Yeah, big companies.
Dominating
in terms of their market share in each sector, whether it's got to do with household consumer goods, passenger vehicles, television. If you look at all these sort of categories, across the world, what we are seeing, and even in India, is that the top companies keep gaining more and more market share, almost at the cost of the small and medium-sized companies. And that's a trend that we have still seen play out over the last year or so.
Right. That's in this review of where Ruchir got it right and wrong. You're doing quite well. Were you always a student who got distinctions? No.
Well, the reason we're doing this is because it ended up being okay. But
no. We do it every year.
That's
right.
We won't do
if it doesn't work out, we just say move on. Okay.
We skip on to the top 10 for this year, right?
We do it every year. But so far, you've got 6 out of 7 spot on. Let's have a look at number 8. Point number 8 in the top trends of 2018. You said India had 3 major concerns. We won't go into graphics and details about that, but quickly, what was it about?
Well, I think that what I was saying was the fact that we were likely to see some deterioration in India's main macroeconomic indicators. I was speaking about the current account deficit. I was speaking about the fiscal deficit, and also what was going to happen to our core inflation rate. And broadly, I think in 2018, these concerns were ramped up.
Yes.
Now, luckily, at the end of 2018, I think some of these concerns to do with inflation are beginning to ebb. But the big theme in 2018 was that these macroeconomic concerns really came to the fore and was one of the main reasons why the rupee sort of fell quite a bit in 2018, because these concerns were there. And some of these concerns linger as we get into 2019 as well.
And you always wonder with this deterioration, we were so lucky that oil prices came down because that's our largest import. We are huge oil importers, and we still couldn't capitalize on that.
Yeah, that's been the story for a long period of time.
Welcome to India.
Exactly. But as we showed that oil prices were down 20% last year.
Wow.
But that did not lead to any fiscal improvement, which you would have naturally expected in other years.
And balance of payments.
Right. Yeah.
Trade balance, it should have made a huge difference, but
No, but
and
the current
again,
account
that's something you'll
deficit-
be looking into about whether India is taking advantage of the US-China
trade war. Yeah.
contretemps. Yes, trade war. Okay, let's move on from number 8, India's 3 concerns, to point number 9 out of 10. Point number 9 is Indian companies are best in class in terms of the returns they give to the economy. Return of investment, return on capital. Did that happen again?
Well, I'd say that last year, as we pointed out, that nothing really worked. So even the average Indian company did quite poorly in terms of like the returns that they gave. The small to mid-sized companies did poorly. The point that I was making here was the fact that if you compare India's companies to other developing countries, Indian companies generally are of better quality when you look at some of the measures that we're talking about in terms of what's their return on equity, what are the earnings growth that they give, how consistently do they deliver that. But yeah, 2018 per se was not a great advertisement, I would say, for how well Indian companies do because of the poor returns that the average stock generated in India.
Right. You said the stock market didn't give any return, so...
Yeah. But especially
again,
like in dollar terms, as I said.
In dollar terms, especially,
yes.
Especially since the rupee weakened against the dollar.
Right.
Finally, let's look at the last, point number 10 in the top 10 trends of 2018 was kind of fun distraction. It's called peak distraction, and that's distraction that all of us have by our mobile phones, pads, iPads, notes, etc. And how bad that was, and was anything being done about it? Well, Ruchir points out that Apple almost forced to come out with some new digital wellness features, just to counter this image of screens being negatively affecting all of us, distracting us from China had a crackdown on children video gaming, and interestingly, Ruchir discovered, because he uses it so much, the word of the year, nomophobia. Nomophobia?
Right.
I know what it is, but tell us.
Well, I think this is like the word of the year, which was chosen on the basis that the fear that people have of being without their mobile phones for even a very short span of time, and that sort of ended up sort of capturing the zeitgeist, I guess, in terms of, or also, I guess, in a way, sort of mocking this culture that we are in, where to live without any digital device has become so difficult. But the broad point here is this, that there is increased awareness, I think, that there's a law of diminishing returns to the use of technology and of smartphones and other sort of gadgets around you. That it has undoubtedly led to a big productivity boom over the last decade as these things have sprouted, but also the fact that that we've probably hit a tipping point where beyond that, if you use too much of this, it has negative returns for your sort of well-being. And I think there's much greater sort of consciousness now about what should we do to try and limit the amount of time we spend on these devices before it begins to hurt our relationships, it begins to hurt our productivity in general. So I think that is something we're likely to see much more, and therefore digital detox is the new phrase or the new buzzword rather for many people now.
But I mean, you do also do a lot of constructive work. You read books on it, you listen to audiobooks, you read the latest news on it, especially on NDTV.com. I had to plug that. So it's a distraction, but also there are a lot of positives.
No, that's what I said. There's a curve to these things, which is that like it's an undoubted positive up to a point, but too much use of it. Like in India, I think the average person who has a smartphone uses it for more than 4 hours, or like 4 to 5 hours. Data is so cheap that they're using it more and more that you begin to see sort of declining returns to your productivity. So I think it's the usual curve.
Well, Ruchir, that's the full list that you forecast last year. And being a very generous and not very strict teacher, I would give you 9 out of 10, 90%. Next time we will expect better. But well done. Okay, now better listen to Ruchir for what's coming up, the top trends of 2019. Now let's go trend by trend that he's forecasting of what's going to happen in 2019. Let's look at the first one. The top trend of 2019 is peak America. That means America will have peaked and will decline this year. Let's have a look at what exactly his data is saying. First of all, America has had a great decade. Is it coming to an end? And this is some amazing figures. If we go slowly through this, you've looked at every decade for the last 50 years, 70 years actually. 1950s was the decade of Europe, and it lasted only 10 years, and it started declining after that. The 1960s was the decade also of America, but of American stocks. So that lasted again 10 years, more or less. Now let's have a look at what happened in the 1970s. It was the year of oil and commodities which boomed. We all remember that. The year where the Middle East really benefited. What about the 1980s? 1980s was the year, of course, of Japan. Wonderful, booming economy of Japan that showed the world the way to go. Again, it lasted 10 years and it really went into decline. 1990s, the tech boom. That was California, that was startups, that was people becoming billionaires literally overnight, and then the crash in about 2001?
Yes, 2000, yes.
2000. 10 years exactly. What about 2000? It was the boom of emerging markets, India and all the emerging markets, and again lasted about 10 years. What is amazing, Ruchir, is this fact that he found that they'll roughly last 10 years. Of course, 9, 12, 11, but averaging 10 years, and lovely division of who was the real winner in each of these decades. And finally, what about the 2010s? America has been the boom. America has been the boom in what sense?
Well, if you look at the American stock market for one, yes, that the American stock market this decade has basically tripled in value.
Wow.
And it's tripled in value at a time when the rest of the world's stock markets have, including India in dollar terms, have practically done nothing. So, wow, I think there has to be some recognition here that there's so much first talk of American declinism, and we heard so much of that a decade ago,
yes,
that counter to that conventional wisdom, America has done really well this decade in economic terms, and even more so in financial terms. In fact, today, the American economy is about 25% of the global economy. But the American stock market is about 55% of the global stock market value. The gap is 30 percentage points.
Wow.
So, that's really how well the American stock market has done. And even the American economy
and
has...
I guess stock market takes into account expectations and
the quality of companies which is out there, but also the financial prowess of a country. That's what that reflects. And I think that America as a financial superpower has in fact never been this powerful as it is today in terms of the use of the US dollar and how strong the US dollar is, how strong the American stock market had been until the decline began in October last year compared to the rest of the world, and just in general about how much American finance has dominated the world over the last decade. And my point here is the fact that each boom sows the seeds of its own decline. That once
that's what you've shown in these 10-year,
Yeah, that's why it happens. That, once a boom really sort of gets wild, then a lot of complacency sets in, a lot of excesses get built up, and then something else comes in and fills in that gap, at least until they recover and sort of get back to the drawing board and clean the excesses out. So that's what I feel is one of the issues.
Another amazing bit of data which Ruchir has unearthed is that, just have a look at this, it's quite incredible. America is at its 100-year high, not just that decade. That's compared to the rest of the world. This is America versus the rest of the world, an index. The American stock market basically divided by the stock markets around the world, and it has hit a peak in 2018. That is amazing. 100-year high, very rarely do you see that in anything.
Exactly. Yeah. So I think that's my entire point, that that the American stock market has done so well compared to the rest of the world that the stock market today is at a 100-year high relative to other countries, or at least as far back as we have data for this. So I think this again tells you that how well America again has done over the last decade. But now I think that as interest rates in America are going up, the fact that the American economy today is already in the midst of its second longest economic expansion in history. Again, data going back over 200 years, I think. And if the American economy continues to grow till the middle of 2019, it will become the longest economic expansion in its entire history.
Wow.
So I think that it's been a great streak. So first we have to acknowledge that.
Yes.
But two, then there are signs that this is beginning to fray, that this is sort of,
Right.
that a lot of the excesses are beginning to build up out here. There's too much corporate debt in America. The fact that the American stock market compared to the rest of the world is much more expensive. The fact that the US dollar is so expensive, which is beginning to hurt its exports and also its manufacturing sector. So I think there's a natural feedback mechanism, and that's what I'm concerned about as we're sitting at these very high levels. It may be peaking.
Peaking. Now let's have a look at, again, looking ahead at 2019, let's have a look at point number 2. First was peak America, that is probably peaking or peaked. The second is this, I love this concept, the rise of anti-bubbles. You're going to see that this year. Now, what does Ruchir mean by anti-bubbles? Just take a look at this. These are particular areas that are not being focused on. When companies are bigger, for example, than major countries around the world, something is wrong, says Ruchir. For example, we know Apple hit $1 trillion around October last year, and Indonesia, Malaysia and Philippines add their entire value together and it's less than Apple. That is ridiculous. And more than that, even if you look at some Eastern European countries, add Poland, Czech and Hungary together, is nowhere near as big as Apple, one company. So an anti-bubble, just describe what exactly do you mean by so much focus just on these high-profile, flashy companies like Apple?
Yeah, so I think that's the entire point, which is that the market value of Apple and Amazon and some of these tech companies had become so large that it was dwarfing some of these other countries with pretty decent economic fundamentals. And so much has been spoken about bubbles, that there's a lot of hype about these companies and why bubbles burst, but not enough is sort of spoken about anti-bubbles, which is in a way the mirror image of bubbles. And I'm not talking about anti-bubbles of companies or countries that aren't doing well. But these are countries and companies
doing pretty well anyway.
That are doing like pretty well,
but
all because they don't fit the hype. And the hype of the last decade has been all about America and all about technology, that the countries and their stock markets have done quite poorly compared to America, even though their economic growth rates are quite decent and their fundamentals are quite good.
You also mentioned an indication of how there's over-focus on some and lack of focus on others, even though they're doing well, is the amount of trading done in, say, Apple stocks or Facebook stocks.
Exactly. So, that's one sort of very interesting statistic, that the trading volume in Apple, the stock, on a daily basis is about $6 billion.
$6 billion?
Yes, like on a daily basis.
My God,
now
$6 billion a day.
Yeah, the trading volume in all these countries put together, which is Indonesia, Malaysia, Philippines, is less than $1 billion a day, even though their size is sort of comparable if you take the market value of of those countries as your graph shows compared to Apple. So that tells you about where the hype is, as to where all the excitement is, and then where all the neglect is. So the anti-bubbles is really rooting for the underdog. And I think that as the sort of bubble bursts, that's when the anti-bubbles get much more attention then, because people sort of look as to where to put their money, what do we do at a time when our favorite theme has sort of gone bust.
Wow, really, really interesting. And if you looked at India in this context as well, we're not quite an anti-bubble, but it is a bit of a shock for us patriotic Indians. We were also eclipsed by the tech issue, Look at these, the FANG, that is Facebook, Amazon, Apple, Netflix and Google, $3.5 trillion they're worth. And India's GDP, $2.5 trillion. Less than 5 companies. It's a shocker.
At the peak of the boom.
We are neglected. People like
compared
you.
Compared to these companies, yes, because India's market value is even less than $2.5 trillion.
So this is our GDP.
Exactly, this is our GDP. So this just tells you about the fact that these companies have dominated so much that everything else has been neglected. So this is the mirror image of a decade ago. A decade ago, it was all these emerging markets, India, which were dominating, and some of these companies hadn't even been conceived, or you hadn't even heard of them, or they were being neglected, like the likes of Netflix and Amazon. Their business models were being questioned, and then they boomed, and then countries like India and Indonesia, the other countries that I showed, did quite poorly. So I think that we could once again be setting up for a role reversal in the coming few years.
But I find you an extremely contradictory person, to put it mildly, in the sense that you believe that the stock market does reflect value. But here you're saying it not only reflects value, it reflects a bit of flamboyancy and trends and fashion, which could just be overvaluing certain companies and undervaluing some solid others. Yeah. So is it a good measure or not a good measure?
Well, the stock market is.
Are you schizophrenic?
I think the stock market is, which is that, that the stock market is the best measure of current business confidence. That's what it's telling you, that this is what the current business confidence, it's the best measure of that.
Yes.
Our job, and I guess of people who want to be sort of look
ahead of the curve.
Yeah, is to try and sort of figure out as to how things are going to change over the next few years.
That's the key.
Exactly, and I think that's what we're trying to do here, which is to
figure out signals, and you're seeing ahead like you did last year as well,
right?
And the year before last. And this is I love this anti-bubbles, which the time of anti-bubbles, of which India is not quite one, you said, but could be one, or at least all these many other countries.
In general, I think that the bubble is mainly in the US. And the anti-bubbles are in its shadow spread around the world. Right. Some of those are more extreme, as we pointed out, like Eastern Europe or Southeast Asia. And then you also have countries like India, which have been overshadowed by the rise of these tech companies.
Right, that's absolutely amazing, actually, and one should look out for that. So think about whether you should put your money in an anti-bubble from now on. Don't put it in a bubble, right? So that was the rise of anti-bubbles. Let's look at the third in the top 10 trends of 2019. The third trend is why interest rates cannot rise much. And now this is of course global, but it always has spread effects onto India. So for people who have got home loans or are paying back loans of various types, this comes as a bit of good news. Why should interest rates not rise that much? And this is Ruchir's explanations. They can't rise because there's already too much global debt. Now, he has mentioned this before, but the impact is now becoming really serious. Remember, just 10 years ago, global debt was twice global GDP. Now it's more than 3 times global GDP, about 3.2 times, I think, 320%. And really, it's shamelessly carried on even after the 2008 global debt crisis. Now, when it's so high, Ruchir, 320% of global GDP, why do you say interest rates can't rise then?
Because it becomes very hard to service the debt. So I think that's what we have seen, that the moment interest rates begin to rise too much, global growth has a big impact. It begins to slow down. The financial markets begin to panic. And I think that's what we have seen, that one of the big trend changes we saw as we exited 2018 is that these expectations of continuously higher interest rates in the US and other parts of the world have been dampened significantly, because this recognition is there that there's so much debt in the global economy, they just can't handle higher interest rates. China is one of the biggest reasons why this has happened, that the country which has taken on the most debt after the global financial crisis of 2008 has really been China. And so they're also...
no way interest rates in China are going up.
Exactly.
But India, India's debt is not that high, right?
Yeah, India's debt is not that high, but I think in an environment where global debt is so high and where
interest rates
are not likely to rise too much from here, it is very hard to see as to why India would have to also increase interest rates, particularly because inflation is now showing signs of stabilizing everywhere, not just in India, in fact, across the world. Right. The big trend is that inflation is again showing signs of falling in reaction to the weak global growth we are seeing.
And also we say India's debt is not that much higher. It's certainly not nowhere near China or anywhere like that. But India is a very poor country. So the debt level that we have is already very high for a poor country. Is that right?
Exactly. For a sort of less developed country, our debt levels are reasonably high. So the broad point here being that what happens to global interest rates clearly has an impact on Indian interest rates as well.
I must tell you, I was talking to KCR during this election, and I said, you're giving all these handouts. What about the debt of your state? I said, what are you talking to me about debt about? Look at America's debt. Look at China's debt. Then talk to me. And he had a point.
Well, I mean, in terms of the fact that, but do we want to get into
120% and China's 300% or more.
I know, but do we want to get into that, sort of position in terms of it? And it's not as if these debt buildups have no consequences. Right. There is a consequence at some point in time. I mean, China, for example, is facing a major slowdown now. When China was growing very rapidly, right up until a decade ago, when it was growing at 10, 15%, its debt levels were quite low, in fact, as a share of the economy. So, yeah, but
so
there are
governments
consequences.
can't just waive off debt like they waive off farmers' loans? No, can't do that. Sorry. Let's move on to the next point. Point number 4. Trend number 4 in the top 10 trends of 2019. So who benefits from this current amazing round of deglobalization? I mean, it's been going on for a few years, but it's really hitting a peak now, especially with Ruchir's favorite person, Donald Trump. Sorry. I shouldn't have mentioned that secret. But anyway. So deglobalization, trade as a percentage of GDP, global GDP. Just have a look at how it's changed. It used to be 30%. It hit 60%. That's when it was really a wonderful world where trade was, exports and imports were happening between countries. And now it's started falling off. And a 5% drop is a lot. Now, one of the reasons for this is, of course, the US-China standoff or contretemps or whatever. Well, how would you describe what's happening between them? Competition.
Yeah, but we'll get to that. But in general, what's happening is that across the world, protectionism is on the rise. And that's why global trade as a share of GDP, there's a backlash.
So why is protectionism on the rise?
Well, it's a backlash. As this graph shows, that because there's massive increase in globalization, there are some people who have not benefited from this massive increase in globalization. Yeah. And when a pendulum swings too aggressively in one way, you do get some sort of swing back because of the backlash, because some people think that they have been left out of this big sort of boom which has taken place. Right. So that backlash has been going on ever since the global financial crisis hit us in 2008. It's been happening in sort of, salami slice sort of cuts. Right. So therefore we have seen this retreat that everyone is raising tariff barriers, non-tariff barriers as well. But the key thing here is that there are some countries who are in fact benefiting from this trade war which is taking place between US and China. And that's what I find really fascinating. That you can sort of...
And where is India in that? Exactly. So you've done some data analysis on that.
This, yeah.
Just have a look at the implications of this. China, US deglobalizing or not interacting with each other. With China down, who has gained? Look, China trade, imports in America of Chinese clothing, apparels, has gone down nearly 6%, 5.5%. Who was the biggest gainer? First, Vietnam. US imports of clothing from Vietnam is up 6.2%.
Their share. Exactly.
Yeah, which is amazing.
Right.
And more than China went down. For the rest of the world, up to 1.2. So Vietnam and the rest of the world, excluding the countries we're going to show, have taken the place of China in their trade with America. Bangladesh, done pretty well, up 0.8%. Again, filling in some of the gap that China has left. But look at India, unfortunately, only 0.2%. That's a tragedy because this is apparels, clothing, and we used to be kind of really had a very positive outlook on our textile sector, and just increasing by 0.2, where Bangladesh 4 times higher, of course Vietnam going through the roof.
Well, it's been a lost decade for Indian exports, really, in terms of how poorly Indian exports have done, and it's just sort of sad that we're not ever able to benefit from these shifts which take place in the manufacturing landscape. But I find this, like what's going on is pretty interesting, and it's an opportunity if someone wants to capitalize on it, which some countries are. That if you speak to the average American company today, what they are telling you is that in the olden days, or by olden I mean like a decade ago, if you wanted to set up 3 factories, we would possibly do it in China. Today, if you want to set up 3 factories, we will sort of think of spreading our risks because of the US-China trade tension that's taking place. So maybe we'll put one factory in China, but maybe one in Vietnam, or maybe one in Indonesia or Malaysia. So some of these Southeast Asian countries in particular are like benefiting from this, at least in terms of taking up.
Investments which are not showing up here,
Yeah.
and which will show hugely in the future, maybe 2, 3, 4 years from now.
Yeah,
Wow.
but this is exactly. So this is all symptomatic of the same trend, which is the fact that China, in terms of, from being this big global export powerhouse, is seeing its export momentum slow down, its sort of market share drop in some key categories, and there are other countries which are stepping in to fill in that void, particularly in Southeast Asia. And the biggest success story in Southeast Asia has been Vietnam.
So if one is looking ahead at this year, this gap that's been created because of China and India, China and America's trade going down, Vietnam is one place to look at.
Right.
There are going to be ripple effects in that economy. And can India take advantage of it this year at least?
Well, India can always take advantage of it.
Great potential.
Exactly. But, it's one of those things because of a multitude of reasons that we're never able to capitalize on it in terms of, how our labor markets are and the reforms that have not been carried out there, in terms of, what happens with just the entire regulatory environment. If you go speak to the average business person, what he or she has to say about the tough regulatory environment that they still have to face. So yeah, this is one thing that there's always the opportunity, but we have to wait if India sort of ever increases that.
Booming place, look at Vietnam or even Bangladesh.
Yeah, these are the economies which are benefiting sure from this trend of deglobalization.
Right.
Or
Especially
stepping in the void where
that
China
is leaving.
Exactly.
So number 4, who benefits from deglobalization? We just saw Vietnam huge. Bangladesh to some extent. Now let's look at trend number 5. Now we're moving a little away from economics here at this particular point. You've moved on to kind of the political scenario where you talk about this huge anti-establishment wave that you're finding across the world, and that rolls on. Now what exactly does Ruchir mean by that? By that he means there's been an amazing increase. If we just the anti-establishment wave across the world, this is what we mean by this is votes for populist right-wing and left-wing parties has gone sharply up. It did go up just before the Second World War, of course, with the Nazi movement, and then it's been more or less flat around 10% of the vote, but it's just gone shooting up again. And the votes of populist right-wing and left-wing parties are as high now as they were really in 1939, 1940.
Yeah, so this is one of the trends which sort of worries many people, and this is particularly true in places such as Europe, but it's also true in other countries as well. And of course, some of these definitions are a bit fluid as to how you define.
You say right-wing and left-wing parties, but these are mainly right-wing. It's a right-wing populist movement.
Yeah, and that's partly because left-wing populism in many places sort of has imploded, particularly places like Latin America, and other parts of the world. But in general, if you take it together in terms of, how these extreme parties are doing, their vote share has gone up a lot, again, because of a general disenchantment with how the establishment has responded to the problems which many people face in these countries.
So the contradiction that Ruchir has found is that despite this anti-establishment wave that rolls on, the kind of leaders that have come to power have been much older. The average age of leaders used to be 53 years old, and now has gone up to 61 years old. So, experience matters. You guys really underestimated terribly.
Yeah, I have to say, I'm totally mystified by this as well, in terms of, but it seems so, it's counterintuitive that you would expect in a world of much more social media and other sort of tools that are being used today, which are much more tech sort of savvy, you would expect the younger generation to sort of catch up here. But it seems that when it comes to politics, experience really matters. And I think that you were telling me that's what also matters in India as well.
It really matters on television and on TV channels and on elections and things like that. Yes, matters a lot. Okay, let's move on to the next one. The next is point number 6. Point number 6 is fiscal indiscipline, which we talk a lot about in India, is rising everywhere. Now just take a look at this data that Ruchir has unearthed. Fiscal indiscipline across the world, it's a phenomenon everywhere. In fact, the fiscal deficit as a percentage of GDP was just 2.25% and has gone up to 3% on average. Now that kind of increase, that's 0.75 on 2.25, that's a lot.
Yeah.
And it is a bit worrying for India. If we move on and we just see what is worrying are things like these loan waivers. I mean, I do believe that they are necessary, but they have to be done responsibly. And if you look at the last big loan waiver in 2008, since then nothing much has happened, little bit in 2014, but look at the last 2 years, 2017 and 2018, huge increase in loan waivers. So this is going to hit our fiscal deficit a lot.
Really, yeah, I mean that's sort of logical. Or the other negative consequence, which is what India has sort of done in the sort of recent years, is that it's sort of spending on these things goes up, like loan waivers and other sort of short-term giveaways, but it comes at the cost of reducing government spending on infrastructure and investment sometimes.
Capital spending, investment,
yeah. So in terms of, that's what happens. Yeah. And I think that for me, this is one of the main reasons why China has grown so much faster than India has over the last 20 or 30 years.
Right.
That China, on average, their government spends about, as a share of the economy, about 3 times as much on investment as the Indian government spends.
Actually, that's one of your points that you make. Just let's move on to the next top trend and look at how India is really becoming from fiscal indiscipline. One of the reasons is, number 7 is what Ruchir calls a one-engine economy. Think of an airplane with just one engine. If that doesn't go well, man, you're in trouble. So let's say, just look at the details of that, the data. India is still a one-engine economy in the sense that consumers and consumers alone lead the way. That's what you were just talking about, how China, it's a lot of investment, a lot of capital formation, infrastructure, but in India, it's all consumerism. 70% of India's growth on average is because of consumption, and that doesn't have a long-lasting, it does not a good sign for the future. So that is a bit of a worry.
Yeah, well, not so much like a concern, but also tells you that based on consumption alone, it's very hard to grow at the rates that we want to, which is 8% plus. And in China has had the opposite, sort of problem, which is that they too much investment, not enough consumption. So China's trying to rebalance it in that regard.
But all those years of high growth was because it was investing at 40 to 45% a year.
Including,
huge.
Yeah, but this is one of the ironies, that even though it's supposed to be a communist country and other things about it, the fact of the matter is that China spends a lot on investment and not much on giveaways or so-called freebies.
Right.
That's, I guess, if you want to put it that way, whether it's the price of Indian democracy or the price of the fact that we have a very heterogeneous kind of population, but the fact that we spend so much on that compared to what China does as a share of its economy, whereas they spend a lot on creating roads and other infrastructure, which sort of boost productivity in the long term much more than these kind of giveaways that we do here.
You've traveled around in all the villages and you see how terribly badly off farmers are. This farmers' distress is a reality.
Right.
And you've got to feel that if you waive their loans, and loans are a big problem, repayment of loans. If you waive their loans, yes, they will become more productive. They can do other things. They can invest their time. Their children can do other things. So given the level of poverty and distress, should we be looking at percentage of your fiscal indiscipline? It is a welfare measure.
Right. But no, it's not about one specific measure, but they accumulate. Right. So which is that, fine, you can do farm loan waivers if you think that is really where the problem is. The real issue in India, and this is one of the things, which sort of, I think has not been properly studied, is that we don't even have a proper account at the number of schemes that the government over time has launched.
Yeah.
So
and I agree.
We don't even have a proper count of that. I was asking this to somebody, and someone told me that the central government itself may have more than 1,000 schemes. So it's like one scheme after another. You can keep doing that. But the issue is that, in terms of that, where is the prioritizing of that? So yes,
the other
each one individually
one could make is between a freebie and a welfare handout.
Right.
Freebie is like giving a grinder or a washing machine, which doesn't really affect any long-term impact on your family. But if you give a schoolgirl bicycles, or you give shepherds a whole lot of sheep, their life can change. Those are kind of different to just freebies, right?
Yeah, but this is a much sort of longer debate. But
Yes.
my issue, entire issue, is that if you have more than 1,000 schemes out there, even to
that's
administer them
crazy.
properly is extremely difficult.
And one other point you mentioned is that all this consumerism, another very worrying thing that's happening in India, if you just have a look at that, all this consumer spending, it's really increasingly based on debt, on loans to just consume. Look at the sharp increase they've been over the last 5-10 years. It's just very worrying. That.
Yeah, this is household debt.
Yes.
Thankfully, it's happening from a low base, which is that household debt wasn't that high.
Right.
But it is a bit sort of concerning that a lot of the increase that has taken place in the sort of consumption in the last few years has not been so much based on just income, but the fact that people have taken much more debt. So when they're buying, so if you look at the amount of financing,
that debt is going to consumption rather than into assets and building and creating something for the future, some infrastructure.
Yeah, so even in terms of the financing of buying new passenger cars and other such items, it is increasingly debt financed. And as I said, that every economy needs to have some debt financing. But in India, the ratio has increased quite sharply over the last few years.
I think your figures show that Maruti cars, 80% of their cars are financed by debt, not by people paying that upfront.
Yeah, in terms of number of people who are now using that to sort
Using
of
debt
buy
to
a
buy
car,
cars.
exactly, has gone up considerably in the last few years.
Next trend of 2019. We're moving from number 7, where it's a one-engine economy, it needs much more investment, to this, again, I find it amazing concept, the Techlash. There's a growing Techlash. Now, what exactly do we mean by a growing Techlash? Have a look. The Techlash is really, technology has been the least regulated part of any economy, especially the American economy. And a backlash has begun there and is happening all over the world. All the other sectors of the economy are saying, how come they get away with it? Look at the number of government regulations in the United States in manufacturing sector. 215 regulations.
215,000, yeah.
215,000, sorry. Let's have a look at the next one. Finance, 128,000. Next one, media and telecom, 99,000. And tech, just 27. 215 and 27. And that's why it's doing well. Why don't governments learn?
I know, but the backlash is growing, as you know now. When it comes to some of these companies, you can see it like in the news, some of these FANG companies, in terms of like how much they're being able to get away with, a lot of stories being done about that, so I think that, and we're seeing it like in India too, whether it's got to do with sectors such as e-commerce, we're seeing increased regulation come into these places. So it's like these sectors have grown very rapidly and they're new, but now that the government is sort of getting wind of these sectors, you're seeing much greater regulation take place, but also like a backlash that maybe they have not sort of been that accountable in terms of their growth and their responsibility. That's just a perception. Now you can argue whether it's...
You could argue that they've grown because they've not had all these regulations.
That's right.
So maybe especially for India, where we're a startup, we're not really have a huge e-commerce setup here, to bring in an angel tax now, to bring in all kinds of regulations at this stage, is a bit early maybe?
Yeah, it could be here, but I think that the broad theme here is the fact that when you look at companies in terms of that you would expect more to happen here, and the US is sort of leading the way along with Europe as well. And we're seeing that even in places like China, where the government is getting possibly concerned by the size of some of these companies and how big they have become.
Now let's move on to from point number 8, which is this growing Techlash, where you can expect much more regulation in the tech sector, whether it's good or bad thing that we can argue, but expect that coming in the year ahead and then onwards. Now the next US-China battle, expected to be all about tech. It's not they're battling on various fronts on trade, but tech is going to be the key, and it's a huge battle because China is doing so well in technology. Just take a look at some of the comparisons. For example, if you look at the number of companies, look at the top 20 tech companies in the world. Of the top 20 tech companies, 11 are in America and 9 are in China. It's really almost 50-50, and forget the rest of the world. So that is real fierce competition. And if you move on and you look at some areas where one is better than the other, it's an amazing face-off. Look at robots. China has 340,000 robots. America has 250,000, much less. And that is the future, robots. And look at semiconductors on the other hand. These are really what are chips in your phone, in your computer, in your cars. What we know as chips. $164 billion worth of chip production and sales in America, and only 20 billion in China. So China's ahead in some areas, America ahead in others, but this figure of 11 to 9 of the top 20 big tech companies, amazing. China is so far ahead.
Yeah, China is really, that's something which I would have not expected, given the fact that, like how sort of close that system is for China to produce these amazing tech companies. So if you go to China today, it's a completely alternative tech universe. So Google, Facebook, all these sort of daily staples that we are so used to. Exactly, and they're quite happy with it. So one thing is that they have much inferior versions, and they're sort of
very good.
Exactly, that they're very sort of happy with their sort of WeChats and other things that they have out there, their own news services. So I think this has been something which has been the biggest surprise in terms of just how well China has done on the technology front. Yes. But there is a feeling in the United States and many Western governments that they have been, now rightly or wrongly, they can argue perception-wise that they've been stealing some of this technology, that they have not really sort of gone about the right way. And so now you're seeing that backlash take place as well.
But that could be an American excuse as well, because, we've got to clamp down, we've got to find a reason for
But China is very nervous about this, and it's also still very nervous about the fact that it is still quite dependent on some very key American technologies for its own growth. But I think that what they've been able to do on the tech front in terms of the way the traffic cops or the way the fines are sort of administered because of the similar kind of technology, and then look at how it's become a cashless society. Here we have tried to be cashless through demonetization and other sort of measures. They have become a cashless society just based on technology in terms of just leapfrogging.
Cashless, they've really succeeded in that.
Right, in terms of, I'd say among any major economy, this is possibly the most cashless sort of economy. That you go to a major Chinese city today, Beijing or Shanghai, there is no cash that is used for anything.
Much more than anywhere in the world.
Yeah, much more than America or anywhere in the world. So they've really sort of used that quite extensively.
Well, let's move on from that fascinating ninth point, where the next US-China battle is going to be all about tech, to your last, the king dollar no more. By that you mean that the dollar has been so strong, it's been king of the world, and that is kind of peaking?
Possibly, because if you look at the way the dollar has behaved in the post-Bretton Woods era, which is post-1973, ever since we've been in this sort of freely floating exchange rates, that the dollar has really moved in a band.
Yes, let's have a look exactly at your data on that, and just see as what Ruchir is just saying, that and we've put will holidays be cheaper? That's our little, we want to ask you that. But every time a dollar hits a peak, that upper band breaks it, it comes plummeting down again. That's the band you were just talking about.
Yes.
And it's crossed that band again last year.
Right.
So based on past evidence, once it crosses that band, it's likely to drop again. And if it drops, holidays will be cheaper. So that's the least of the problem. Give us the broader impact of this.
Yeah, I think that, this could in general be good for India and other sort of emerging economies, that typically when we have a weaker dollar, we tend to do more money comes in to our country, and so that sort of helps like everybody. On the other hand, when you have a very strong dollar, that means a lot of the money gets sucked out of the country. So in general, a weaker dollar is better for India and for other emerging economies. So that's the direct result. Then we can, of course, move to the secondary effect of this, which is the fact that as of today, though, it is very expensive to holiday in America, just because the American dollar
is so strong.
Exactly, has become so strong. And instead, you're better off holidaying in many other parts of the world where the currencies are very cheap.
You've done a quick list of which countries you could think of. You have a much longer list, but we've extracted some. And the way Ruchir wanted to check is just have a look as a symbol, the Starbucks index. How much is the cost of a cup of Starbucks latte?
Right.
Tall.
Yes.
Okay. Now, if you go to Cairo, it's only $150, and Cairo is a beautiful place. Mexico costs $220. Now, this is just a reflection of other things which are also, it's at the expense of other things as well. London, $285, not too bad, midway. Tokyo, $325, more expensive than London. New York, $345, and Shanghai, $422 for a cup of Starbucks latte, tall. That is a warning. At least now, don't go to Shanghai. Go to Cairo or Mexico. But you're saying things are going to change next year because the king dollar will no longer be king.
Yeah. So I think that both the dollar and the Chinese currency, this tells you, are pretty expensive, and there's other data and other anecdotal evidence which exactly backs this up. So the fact is that those are two of the most expensive currencies in the world, and then you have a whole bunch of other currencies which are quite cheap. So those are the places to holiday, and I would dare say that those are also the better places to invest possibly for the next few years. It fits in back to our first point of peak America as well.
Right.
That the dollar too is very expensive across the world.
And peaking, in a sense, also peaking, and peaking America
Possibly.
and dollar peaking possible.
Yeah.
Absolutely fascinating. And so if you want more details on that and to help you make your decisions, it's all available on ndtv.com. But once you've listened to Ruchir, you kind of get a feeling he knows his onions. So don't forget, he's writing a book on elections. He's another election fanatic. It's called Democracy on the Road. And it's 25 years of experience traveling around deep into villages. And it's full of wonderful stories and anecdotes. And you can learn a lot from that. Should you prefer elections or economics? Tell the truth.
Any day. Traveling India to see elections.
Okay, great. Well, thanks very much for watching. Remember, everything, all those details are available on ndtv.com. Thanks again. Bye-bye for now.